Hello and welcome Forex traders. Steve here with TradeForexForProfit.com. Today is Wednesday, March 9th, 2016, and we're looking at the Euro US on the 4-hour time frame. Okay, so this was a very good stop hit trade. However, I want to use this as an example of what not to do regardless of how it turns out here. Okay, so if you look at this 4-hour time frame, here's your bounce. All right, we move back to the level, take the stops. Nice, almost a bearish spike candle, almost a engulfing, but considering the significance of the level as well as the outer Bollinger Band being taken out, I set up a pending order to enter this on a pullback. Okay, sell limit order, and I put the limit order right here. The market, as you can see, this very next candle just plummeted all the way down almost to this support level before rebounding. I should have taken my exit right here on one of these candles as it moved past the 1 to 1.5 times profit. That's where I should have just canceled my pending order. However, I wasn't looking at the market at this pair at that time, and it pulled back like right away. Right when this candle opened, it just shot up. There was a news announcement, took my entry. Okay, so this is why when you put a pending order, you have to monitor it very close, because this very thing could happen to you. But what is interesting, if we zoom out to the 1-hour time frame and look at this same setup, here is the bearish engulf. Let me back up. Let's see, 1 second here. Okay, here is your bounce. Okay, here's the stop hit exercise. Let me zoom back in right here, and the 2 times profit target would be right here. Okay, so had we taken this setup immediately right here, okay, on this candle close, we would have already been out of this trade before even the pullback. Okay, so had I stepped down one time frame and traded that, this would have been a better application of the stop hit pattern. However, because we are now in it on the 4-hour time frame with this signal, I'm going to follow through with this trade, and we're going to see how, and if it pushes back down through this level and perhaps test this level here. Okay, but nonetheless, I want to just use this as an example of what not to do, and that is, do not leave your pending order sitting around to rot after the market's already moved significantly in the direction that you're looking for it to go. Okay, this it was an interesting trade. Our 2 times profit target was triggered, and we actually got out of this one okay. However, it's still a perfect example of what not to do. So there's 2 lessons I want to talk about here that we should have learned. First off, cancel your limit order when the market moves into your profit zone this deep, okay, without taking your order. So this should have never happened. However, after this candle takes our entry, I really had no choice but to just wait it out. All right, and we lucked out. I thought, well, maybe it'll go down, retest this level again, take the stops. I had no idea it was going to go this deep. Okay, so the first lesson is, when the market moves into your profit zone without you, because it hasn't taken the entry, cancel your order. Okay, because this candle could have easily been the deciding, the turning point, if you will, for this move to the upside. Because this move, what did it wind up here? Wound up at almost 400 pips, 389 pips, okay, in 3 candles. Now, let's talk about this area of liquidity, okay? Lesson 2. This is an area where the market pushes down and builds a floor, okay, a support level that kind of just meanders along here sideways, goes nowhere, takes the stops right here. Anybody that was guessing the bottoms, anywhere through here, they placed their stops, they were hit here. All right, they're hanging on, looking for a lofty target. After this candle here, okay, you might have more traders that missed this entry. They're going long here, and they're putting their stops here. Okay, you have all the while you have these traders that are possibly moving their stops, trying to ride this out, whatever they're doing. You have another engulf right here that kind of reaffirms this candle. Okay, so there's more traders going long right in this area. All right, we come back after this. I would have thought this would have been the final the final engulf to the upside before the move, and I expect to see more traders going long here. So what you have are stop orders here, here, and here. Okay, and look at what this candle does. It takes out everything all the way. It pushes down below this one about 5 or 6 pips, I believe. I can't get my cursor on it exactly. However, it looks like about five pips beneath this level. Okay, so because of the liquidity here, how do we know that it was a real liquid area with a lot of orders sitting around? Because look at the way this repelled. Okay, it bounced off of this like a springboard. I mean, 3 candles to go 400 pips. That doesn't happen too often. Okay, and it did in this case, but we lucked out. So once again, a perfect lesson, a perfect example of a good trade that's really not a good trade because it didn't take your entry when it was originally anticipated, and that in of itself tells me that it's not a perfect trade. So sometimes you're going to have a perfect pattern set up with a perfect signal, and if the entry is not right with the target, the whole setup is null and void. Okay.